Oops. Yo, good morning, everybody. Y'all ready for this marathon today? Or this week? Should be interesting. But yeah, let me know if you guys can hear me okay. See everything okay. Good morning, Sean. Good morning, Emmanuel. Tony. Oh. Let me know if you guys can hear everything okay. See everything okay. It says it didn't want to connect my headphone for whatever reason. Hey, Emmanuel. Damn right, bro. Make sure y'all like the video. Okay, good. Yeah, I wasn't sure because for whatever reason it's not really wanting to connect my headphone, but whatever. As long as y'all can hear everything okay. Let's get everything set up. We're about to see CPI, so I wanted to make sure that I got on. Okay. That went down there. Should I give me 1 second? I gotta make sure I set everything up properly. So we'll see what CPI does. Should be pretty chaotic. So yeah, when it comes to what price could do here, we talked about this yesterday in my private group. Said that could look to be an issue, something to target. We also talked about this inefficiency because when the week started, we had this whole entire gap available, which is a regular trading hours gap inefficiency. We talked about this going into yesterday. Told you guys there was a likelihood for it to target that, right? And if I didn't say that, call me out for not saying it, but I talked about this and I said if it gets excited enough, we may look to target this. Wasn't sure if we were going to be able to get down to this, but we went right to it. And then right after it swept that, we've now created a bullish breaker going the other way. So we do have a little bit more of a gap up here that's available. We are inside of a nasty range. Like this thing is not very cooperative in terms of at least like one-sided response. We had SMT at these highs here that led to the decline. We had a balanced price range in here. When it got below that, I told you guys it's going to stay in that lower 25% as it looks to fill in the rest of this. Now what we can see, I can actually take that off now. What we can see is there's now a giant regular trading hours gap that's available above this high. Okay. So now CPI might get us up into that level. So I would keep your attention here. If it's going to be bearish, we're not going to want to really see the midpoint from this low to that high taken. But if dollar's going to keep this decline going, that's what I'm missing. No, I was missing one. So if you look at the dollar, it looks like it's in a bear flag situation. We got these relative equal lows down here. Because it's so reluctant to want to get through the highs, it looks like it wants to go and take that out. So I'll keep my attention there. If that's the case, we should see this continue to rally. We should see it pick up. And then we should see this end up getting into this. It justifies this pretty heavily. Counterparty liquidity is down there for buys. We're respecting the wick in there. So unless something dramatically changes, let's see what happens here. Yep. It's running right to it. You see how quickly we kind of determined where price would likely reach into, right? I mean, it's just so obvious when it comes to these regular trading hours gaps. Again, just because we're going to 24-hour trading, that doesn't mean that the reference from 6:30, well, yeah, from the close of previous day to 6:30 a.m. Pacific Standard Time, just because it's 24 hours when they do make that full shift in terms of the trading hours, that doesn't mean that this is going to go away in terms of importance. I see a market maker buy model in here. So now that we're above this level here, it should hold as support or an inverted balanced price range. So I would expect that. And if we lose this low, that's the only time I would be looking to be bearish. But yeah, so I mentioned this little piece of price delivery up here. It's inefficient. So neither buy side or sell side is up here. We do have a bullish move right here, but we don't have in this little gap right in here. From the low of that candle to the high right there. I think that that's going to be something price might want to reach into. Of course, if it gets there, there's no reason for them not to blow this out either. If we get up above these levels, we may see a change in state of delivery here. Right, so the order block, that one's lower, and then this one's lower than both of them. So it's more so referring to this order block. These are all inside. We have a stop run. That's just a manipulated move. The bodies are what I'm paying attention to. But yeah, the assumption that this was going to reach up into this level obviously came to fruition right out the gate. Right when we hopped on, that's the first thing I said within 10 minutes. I mean, these concepts are amazing. So what is the protocol you're probably thinking for CPI? Did we miss a move? Are we going to be able to get a move? I mean, it's huge, right? It's a big move. Does that mean we don't get to take a trade? Well, when it comes to CPI, FOMC, NFP, whenever there's a response from these news events, same thing with the Fed speech and rate cuts or hikes, right? Whenever those things unfold, we got to wait for at least 30 to 45 minutes. In this case, I'm just going to wait till 6:30. I'm not even going to attempt to try to get anything. We have a news release at 7 a.m. So honestly, we may even give that first 30 minutes of the opening range the ability to unfold, so then we could just get that data. So we had this markup on Sunday. We're inside that suspension block here. Let me change that color. So yeah, that's kind of the protocol, kind of the mindset. It's very easy as a new trader to see these big moves and think you're missing something. You know, maybe you are missing something. Does that matter? If you missed a move, is it the end of the world? Is it something to stress out about? I don't think so. And the more time that you spend on these calls with us here in this community, the more apparent it becomes that it is a highly irrational perspective to have in terms of you freaking out about missing a move, right? If you have rules and a trade happens or a move happens that you can't be a part of, but the rules didn't kick in, did you really have a move? I would say you didn't, right? So there's really nothing to worry about whenever price moves aggressively and you miss a move. There's nothing to be concerned about. And if you are concerned about every setup in the market, you know, it's a character flaw that has to change, because you're going to end up becoming a gambler without even trying. And in trading, unless you're a professional gambler, like a poker player is, right? Like they're professionals. They understand risk management. They understand probabilities. When poker players get a specific pair of cards, they know what the odds are relative to the deck of cards in terms of them winning or losing. So they either fold or they apply pressure, right? Increase what it is that they're betting. But you have to know when those circumstances arise. And in trading, you can have that same perspective. That's why some gamblers who are professionals actually do better or do good in trading, because it's all risk management and probabilities at the end of the day. So Jared Tendler, the trading psychology coach, who used to be, I believe, a gambler professionally, created a book called uh, The Mental Game of Trading or something like that. Mental Edge in Trade, something like that. And he utilizes that information he gathered from being a professional gambler in trading. And he made a book about it. And it's wild to see the correlation between these different professions, right? They're very much the same, but they just have different, scenarios. It's a different vehicle, very similar mindset. Things are not random, just like how poker is not random. The cards you're given may be random, but when you get the cards, there's a set percentage that you're going to win or lose, given that hand. And it's the same scenario when you're looking at price action. There's a set of probabilities that take place in a particular condition around particular news events, right? Particular times of the day, particular times of the month, particular times of the year, particular times of the week, particular times of the session. Okay. So there's probabilities layered on top of these things. So over time, you want to be aware of this and start to really note through journaling the probabilities of certain things unfolding when certain things are present in the chart, right? That's a part of this industry or part of this journey that takes a lot of time. Unless you're trading recklessly, right? Just winging it, swinging at everything. There's ways to make this very, very based on probabilities. And you should come into the industry, come into your trading every week, every day, that you look at the charts ready to trade with that probability mind. If you come in with certainty and a lack of the ability to be flexible, you're going to have a hard time. And that mindset, thinking in probabilities, can sometimes be stressful, especially for someone that's not seasoned. So over time, you got to callous your mind, accept that this stuff can be, a bit chaotic at times. There are going to be times where you lose, going to be times where you should not touch anything. And you have to accept that. But you want to continuously study. You don't want to lose or win and just put it to the side and not even use that example or experience to then gain more experience, more perspective. Every day there's something to do. Well, it kind of depends on your model, obviously. But every day there's something to learn. I show in my private group and every week here on these live calls that there's always something that you can come away with if you have the skill set, if you know what you're looking for, and you're willing to follow a rule-based idea. And sometimes conditions won't allow you to enter if you're following rules. And you either have rules or you don't. You're just like how you're either profitable or you're not. Right? So you gotta think about things from this perspective. And over time, things become a lot easier. It does get easier. It may be difficult right now, but it does get easier to know what it is that you're looking for. Right? Notice how I said it doesn't become easier to be profitable. It becomes easy to know what you are looking for. Okay. And then when you know what you're looking for, you can measure out the probabilities. So, all this stuff comes with time, but it all starts from having the right information. And here you guys, in my opinion, have a lot of really, really insightful information, a lot of exposure to real world things that, things and perspectives that you probably wouldn't be able to gather unless you had experience. Right? Like how many people probably thought that this gap was going to be targeted? Maybe there's a good handful, maybe more. But how many had conviction that this is most likely going to be targeted based on experience we have gathered by studying these particular scenarios? A lot of people probably lost. They probably were thinking bearishness. We'll see in some of the clips that come out, right? We'll see who put their neck on the line to gamble with CPI. But again, when it comes to these news events, we have rules. We're not going to take a trade pre-market open. There's news at 7 a.m. So I think there's a pretty high probability that they may wait for the major move that's going to happen today. CPI just aggressively destroyed people to the upside. But the secondary news event, depending on what's talked about, we'll see what happens. But I think I'm going to more so position myself around that time. Again, not only for CPI do we not trade that first 30 to 45 minutes after the release, but when there's a split news day like this, one's at 5:30, one's at 7 a.m. Pacific Standard Time, you want to just assume right away that that massive move or the main move of the day is going to come after that second news event takes place. It could be, low impact news event, or maybe an orange folder that's then followed up by a red folder later on, right? Even if it's not CPI or any of these major news events, if it's got a split news release, you want to think that first stage is probably going to be manipulation. The second one, right, in this case, the one at 7 a.m., is generally going to be the one where it's allowed to then start the move. They're using one as manipulation to just break people, right? And then the secondary one is generally the real one. That's how you want to look at things. You don't just want to go swinging for the fences off that first news event. So many times you'll be wrong, or you'll get caught in the manipulation, especially in pre-market open, right? So yeah, we could see a very aggressive repricing here for the currencies. So overall for the currencies, we've actually hit our level I identified. I wanted to see if we could get a little bit more excited to come and take this, but again, it doesn't have to. We have the high down to that low that then breaks above that high. So that should be treated as a balanced price range. So this is somewhat protected unless it breaks through some of these levels. And it seems that this quarterly fair value gap is holding precedence over these lower ones. So again, we have sell side, buy side delivery, sell side taken, buy side taken. And now this is just a retracement. So in order for us to think on a quarterly basis that euro is going to continue to keep going lower, we're going to have to respect levels like this. We're going to have to get below this inversion fair value gap, right? Respect that midpoint and then just continue to displace, showing little to no interest for this stuff down there to hold bullish. And preferably we see the dollar going lower or going higher if it was to break down through those levels. For now, though, the dollar is declining. We're breaking through very obvious equal lows. We've really had a failure to go up through the highs. There's trendline liquidity up here that we were looking at. This monthly fair value gap is something we were looking at as well. But again, we're inside of a bearish breaker. So we're not going to demand that it gets up there because it already has a breaker ahead of the fair value gap. Whenever you have that, many times the fair value gap will be left available. That'll be a moment in time where a breaker and a fair value gap is present, but it leaves the fair value gap available. Sometimes it'll wick up into there, but most times it doesn't have to, because the PD array matrix and the order in which the IPTA algorithm that ICT talks about, the order in which it seeks PD arrays is very particular. Breakers are the very first things, along with mitigation blocks, when price is seeking a PD array. If there's multiple in the same area, the breaker's the one that's going to remain the heavier response. And if you go look at ICT's PD array matrix videos, you'll see that there's a list, right? He lists them in a very particular order from the middle of the range, right? So if it retraces higher, there's a breaker, mitigation block, then the other ones come, right? So if there's a breaker and a fair value gap, sometimes you'll catch the mixture together. I think some people call that a unicorn or whatever. But again, it's not going to be highly consistent because, again, there's an order in which the PD arrays are seeked, which you see over time once you're familiar with this. Okay, let me actually go pull it up real quick for completeness sake. Where's it at? Okay. So if we're going lower to then retrace and then go lower again, we got the mitigation block and the breaker, whichever one is present. They're not always both present, but if they are present, the liquidity voids or the gaps in price where there is no buy side or sell side, like this in here, right? That's a gap. No buy side or sell side, that's a liquidity void. It's a new week opening gap as well. But that is third on the list. And then fair value gaps come after that. And then order blocks come after that. Rejection blocks, which is something like this, come after that. And then old highs and old lows, right? That are traded into. Those are the last on the list if we're retracing higher to go lower. And then you flip it for bullishness, right? But it's going the other way, right? Same order. If you're running higher, retracing lower to then go higher, you preferably want to see, if you're bullish, these levels below equilibrium of the current dealing range. And then, of course, above the equilibrium in that current dealing range when it comes to bearish. But I can go on for hours about this. There's a lot of very solid nuances that we can get into. But just know that there's an order in which things are attacked. And this is part of the reason why some PD arrays that you look for are going to be left available. Okay? Because again, there's an order. It's organized. It's not random. So, this perspective is very helpful when you're looking at a particular range and you're seeking a retracement. If there's an order block way up here, but there's a breaker sitting right there, you can expect that that's not going to be targeted. Same thing with the fair value gap. Why? Because the breaker and the mitigation block and a void of liquidity, if it's present, happen to be attacked with more interest than the others if these are present. Okay? So next time you see a level you identify that gets left available, like an order block or a fair value gap, there's a couple other things that allow for those levels to be left available as well. Like if there's a BPR, some other balanced price range idea that's ahead of it. Say there's a BPR down here and there's an order block up here you're looking at. That BPR, technically this in here, right? Low, high, lower, low. Once it breaks this low, that's a balanced price range. So if a BPR is there and there's a fair value gap or something above us, that's going to be another reason that price is going to be left available when it comes to those very particular PD arrays. All right, let me know. Let me have a 1 in the chat if you guys understand what I just said. You can go in and backtest this as well. This is an isolated study that I have my students dig into in my private group when they get exposed to this and they want to learn more about like premium and discount, seeking PD arrays. Because again, there's an order to all of this. It's not random. And this kind of explains why certain levels get left available, right? So again, with that being said, if we were to take this, move it down real quick. That being said, when we look at price currently, I see that this is a market maker buy model. Could be, right, if we continue to race higher. In that case, we will then look to see if this whole regular trading hours gap can be filled. We're going to have another regular trading hours gap a little bit later that's going to form below. Okay. Get them set. Price runs breaker low. So it's now BPR and level available. As in price going to run by side. Yeah. Oh yeah. Yeah, you're right on the money with that, bro. breakers, order blocks, inversion fair value gaps, and a handful of others are just simply variations of balanced price ranges. They just look different, right? They have different names, but the operation, how they deliver, is very similar. And if you're in a bullish breaker, for example, you want to watch that upper 25, upper 50% of that breaker formation. You want to see that get respected on a closing basis on any of the next candles that form as you're studying that particular opportunity. Same thing with order blocks if you're bullish. And then it's the same when they're going lower, but it's the lower 25%. Like if it's a bearish breaker or a inversion fair value gap going lower, you preferably want to see on a body closure basis the lower half being respected or not being traded into at all, right? Just maybe touching it real quick and aggressively moving away. That's how you can know that price action is telling you a story that level is being respected. It's active institutional order flow observations. And it's in part how you can verify a particular move that's unfolding. It's also a way to manage a trade. Like in this, as price continues to go higher, right, whenever it creates ranges like this, right, that takes stops again, that becomes a new dealing range. But this whole entire area here, if you're bullish, should remain as a BPR. Right? I look at it as blocks in price. Whenever I see buy side and sell side taken, and then price accelerates away, I'm looking at that as a BPR. So what did I just say a second ago? If that's true, right, and if it is going to be like a breaker I'd like to see hold, I want to see that upper 50, upper 25%. Same thing's true if this was just a bullish order block, which it very well could be if we move up in time frames. Maybe not. Maybe not. We do have this order block though. So again, if it's above it, like it is here, the next candle that opens and starts to print, if it's going to go higher, we want to see that upper, in this case, the upper wick, upper 50% of the wick get respected. We wouldn't really necessarily want to see it go down into that. Because again, when you see a bullish order block, you want to think of power 3 as well, or a bearish power 3 for bearish order block. Right, accumulation, manipulation, distribution. This candle here that opens, pulls back into that low, it's rebalancing, and then redelivery. Same thing with this here, right? It's like an accumulation, manipulation, distribution, rebalance. You should get redelivery. You should expect this. Over time, it gets easier to expect these things, but hopefully that's a simple enough way to understand this, because it's happening constantly all over the place. And once you understand BPRs and the different variations and start to develop conditional familiarity through experience, it becomes like a book you've read a million times. So no matter what price does, you can go in there and pull these things out, especially if you're good at using Power 3 and understanding the logic. Also understanding market maker models. I have a list of concepts that I put together for my private group that I obviously go into great detail about in my private group and on one-on-ones, but I think sharing that list with you guys here on YouTube would be helpful. So let me go find it. Sorry if you guys hear a train going off. So yeah, if you guys could get to the point where all of these concepts have a plan and rules and experience around them, you could really start to think in a very confident way that you have everything you need. Because this helps you determine bias, narrative, helps you validate, helps you just understand what price is going to do, what it's most likely going to do, where to target, what are likely liquidity pools that you use on an everyday basis, which I call liquidity mapping, how to navigate ranges from quarterly, monthly, weekly, yearly, hourly, 15-minute, Power 3 for candlestick storyline, market maker models, which is a variation of a BPR. God dang, the freaking train is loud. Oh, my window's open. Still super loud. Sorry about that, guys. Power 3 is a style of BPR as well. It's just a logic kind of showing you how that's unfolding the BPR. Order blocks are as well, like I said, breakers are as well. Market maker models are a variation in terms of delivery that's setting up a balanced price range. So whenever a market maker buy model is completed, you want to classify that whole previous range that was just traded through and complete as a BPR as price continues to race towards, your potential upside or downside objective. So with that being the case, and the rules around a balanced price range idea are very, very particular in terms of if you have a buy model that gets completed, you want to see that upper 25, upper 50% being respected. So when price is above it, if it comes down into it, you don't want to see the midpoint get violated, because if you do see that happen, you're probably going the other way. And it'll go from buy model to sell model, right? And the same thing's true if it goes lower, creating a sell model that completes. When it trades up into it, you want to see that lower 25, lower 50%, preferably the lower 25% being respected. And if you don't, and it breaks through the midpoint, right, gets really deep into it, it's not as strong of a BPR as we would like. So you may want to go the other way if you can, build that narrative and reasons behind that turnaround. There's a lot of things that we incorporate in that, aside from just the market maker model idea. But Power 3 is the same thing, right? If a Power 3 idea, I'd say we're seeing something like this, goes like this, breaks down, and then say it does something like this, right? You may have saw this as a bearish Power 3, but when you take the low to the high, you get the midpoint. If price comes back into that, this was probably the Power 3, right? Instead of that high. Okay, so the 50% logic is significant also with Power 3 as well. And again, you got to think, right? Sell side taken, buy side taken, displacement. Preferably there's like a PD array here or something, like an order block, liquidity. Preferably this is at the right time, right? Maybe it's in London. You can also use this logic when you're looking at a lower time frame perspective too, for like hourly Power 3, breaking down the hour candle, the hourly range for that particular hour into quarters, which is basically every 15 minutes. And then you see the beginning stages as accumulation, manipulation, the middle portion. So 30 minutes into an hour, 45 minutes into an hour, that could be part of the expansion. And then once you get towards the last 15 minutes, many times the price can pull back and give you the closure or opposite wick on that hourly range, which again, all of that works inside of a larger perspective, which we talk about on Sundays. Never really heard that phrase, W shape retest. Never heard that phase, but it's probably a common situation. I don't use any retail concepts whatsoever or the verbiage. So some stuff you guys may refer to me probably have an ICT label that someone tried to rebrand or rename. But yeah, if it works for you, it works for you. But if what I just described fits something you've already learned before, that's a good thing. I'm sure you can get a lot more context too from being here, because we have a lot of powerful weapons. But I'd be careful if people who are teaching this stuff mix a lot of things, because they're not pure. So the ICT concepts are not going to be pure with them. So they'll probably have a lot of flaws. Still AMD. Oh, okay. Yeah, as long as the logic fits, right? There's not too many conflicting ideas. So yeah, see the supply. There's no supply and demand physically in the stock market, because supply and demand, the supply for a stock they can put as many shares as they want. They can have as little as they want. Supply and demand is only at its purest form in something like commodities, where there's a physical, actual supply and demand factor. So I'd be careful with anyone that talks about supply and demand. They're just, again, trying to rename ICT concepts. Because, again, there's no supply and demand factor in the stock market unless there's a commodity you're talking about. Because those typical supply and demand factors, they're just not available when there's an asset that they can make as many shares as they want, right? Or have as little as they want, and it's controlled. So that alone, that explanation alone, given it's a fact, shatters all these people that talk about supply and demand or label it as such. They're just clearly trying to rename things. And most of them don't know what they're talking about. There's some that do good. Like this guy named BG Forex. He's not really public a lot, but he's one that I became friends with who used that before I learned about ICT. And I just noticed that a lot of it's rebranded for ICT stuff since I was in the charter group. But yeah, just be careful. Kind of hard price action because the daily chart is consolidating. Yeah, it's been that type of vibe all week. So we're in that nasty range. Automatically, when you see prices like this, you got to think it's low probability. It's going to be high resistance. You know, you may see some decent runs here and there, but you should just automatically have your risk lowered, right? You should be at lower risk. You should be cautious. We're also at equilibrium. Those of you in my private group, we've been talking about equilibrium quite a bit. Well, here on YouTube as well, we've been mentioning it. But whenever price is at equilibrium on a higher time frame, and it's clearly for days or weeks refusing to break away from that, or it breaks away aggressively and then comes all the way back, it's being used as a magnet. So whenever we see that, you got to have your horizons for targets, pretty managed. You don't want to think hundreds of handles are the expectation, although you could still get it because Nasdaq has been pretty spectacular. But you want to manage your expectations aggressively around these times. So targets like this, if we get close to this, targets like that are reasonable. All these internal PD arrays like the wick, any fair value gaps that you see, any order blocks that you could see inside the range, those are going to afford you a little bit more clarity, a little bit more reasonable targeting perspectives. Do see that because that was a breaker, we can actually get some projections here. Let's kind of get a feel for this. If it does choose to wildly break, maybe towards these equal highs here, those are very obvious right there. You see how it stopped right here on both instances? What is to the left that can be used to make the argument as far as why it stopped where it stopped? 50% of the breaker. Remember what we just talked about. Breakers are balanced price ranges. So the 50%, lower 25% is what we should see price respect if it's going to be truly bearish as a bearish PD array. And what do you know? Can't get much better than perfect, can you? This is something we identified and have been talking about too. It's not just hindsight, me pointing it out after the fact. We talked about this actively. How about this level down here? Low, high, lower low. That's a breaker, right? Lower 25% is being respected, right? Never even attempted the 50%. So what does that mean? We are going to rapidly continue to go lower. Right? And then what happens here, right? When we go to this low. Actually, take that out. What happens when we went to this low and then we broke above this high? That becomes a breaker. It's also a bullish order block, obviously. But once it gets above it, what happens? upper 25%, upper eighth level, not even the 25%. The middle of that upper 25%, you split it in half, that's an eighth. You can also split these upper and lower quadrants of this upper 25% as well and get what ICT calls a 16th. You can get even more precise right there. But you can see the logic unfolding because it's a BPR. We're bouncing around multiple balanced price ranges all day long. Market maker buy and sell models, power 3, all day long. These things are happening on every time frame, and it helps you build around the narrative or direction you're trying to assume price is going to reach for. Right? Like again, this high, low, higher high. This is a potential market maker buy model. This is a previous balanced price range. So if we can't close beyond the 50%, this may not be done. It may look to attempt to drop a little further. We're in consolidation, so again, we got to be flexible. It's a pretty large run in there. But again, we still have this underlying piece of price delivery we have to be considering, right? We got our Asia and central bank dealers range in here. You get our projections. You have 1, 2 standard deviations. You notice that this breaker I just pointed out is still being utilized as something significant. So you could see that even later on, because this is what it is, it's a balanced price range, right? It's a breaker. It's still going to be used until it gets violated. What turns off a breaker? When the 50% of the range gets taken out and closed below, for this bullish example, or closed above, right? If it's going to be bullish and fail to be bearish. Okay, so all this stuff is continuously happening, right? If it was going to continue to be bearish, this should have been as deep as it would like to have gone. Okay. We're still in pre-market open, but we do have these equal highs up here. Not only here, but again, if you drag it over, it's very nice equal highs up there. I had this mapped out the other day as well. I think I'm going to keep my attention there again, just in case. But that's a regular trading hours gap that has not been fully filled, right? At least a piece of it. So that's a inefficiency. It's a true inefficiency still left available in price relative to the regular trading hours perspective. Because regular trading hours is its own section of trading. Because there's some people that only trade using those time frames or perspectives. So anybody that's only trading through this lens, they weren't able to get in or they weren't able to participate. So that's inefficient. So price has to offer it versus the regular electronic trading hours, right? Or just electronic trading hours. It is offering stuff. So there are people still trading around this perspective. But again, the people that trade only using the regular trading hours, they need to be allowed to participate. So electronic trading hours may trade through or to a particular level relative to the regular trading hours. But if the regular trading hours has a gap, even if electronic trading has offered price in those levels, you still need to refer to them. Same thing is true about highs and lows that may get swept during electronic trading hours. They could still get reached into when regular trading hours unfolds. So levels from this perspective still become significant even when they get swept, right? And assuming you're bearish, right? The things that you still got to refer to. Right, so I hope that makes sense. Hopefully that didn't confuse you. But it's definitely something that most people don't realize about regular trading hours versus electronic trading hours. But it's very, very helpful, right, over time, along with the liquidity mapping list that I give you guys as well. But yeah, so again, we're going to be opening up here pretty quickly. We have a little bit more of that gap that's available, rejecting from the new week opening gap currently. So as long as we stay above this, right, unless it breaks through this low or even below this fair value gap and then decides to respect it, until that happens, we still do have buy side up here, but we're right at equilibrium. So for me personally, in terms of looking for something to engage, I'm going to be waiting, because when we're at equilibrium like this, if you're trying to force a setup because you're really, really excited to get into a trade or whatever, you're going to be recklessly ragdolled, okay? Especially on a week or day like CPI or any other, news event that's high impact. The whole week can sometimes be a bit chaotic. We have a solid news event tomorrow as well, so our live tomorrow should be interesting too. But until we decide to get out of this, we are in intraday volatility navigation mode. So I could care less if we reach for this. I could care less if we reach for this. I want to see something like this. Go to the 1 hour, we can kind of see we got this wick in here, and we got the regular trading hours. That looks pretty nice. Once we open up, we're going to have regular trading hours to the downside as well. That is going to be populating here shortly to there. So currently we have, if I could find it, got this previous day's close there. Okay, so that previous day's close right there may get attacked depending on what happens here. We do have a rejection block forming. We have a large wick rejecting from a logical PD array here, which is a new week opening gap from last week. Okay. You could see multiple regular trading hours outlines overlapping one another. That's just a testament to the fact that we're in consolidation. Whenever you have multiple new week opening gaps, new day opening gaps, and regular trading hours gaps, either individually overlapping or all at once overlapping, that's one of the best ways to identify the condition. What is that condition? We're in consolidation. What is your perspective in consolidation? Do you have a plan around that? Or do you just trade it normally because you think that, that's what you're supposed to do, right? I hope you guys have rules around consolidation, which I share some of mine. I lower my risk. I'm looking for intraday volatility. I'm using market maker buy and sell models to bounce around a particular range, because when it goes lower to go higher, that's a buy model. Whenever it goes higher to go lower, it's a sell model. And when you're in consolidation, it's doing both nonstop. So you can build a framework in a consolidation with the universal trading model called the market maker model. You don't need a bias or overall direction if you can understand what is at play, a buy model or a sell model. Obviously, you want to have these skill sets, but I'm just showing or trying to drive the point home that it can stand alone, right? It's just a way to internalize price delivery, and it's highly effective. Good morning, Jen. Good morning, Fancy. Appreciate you guys hopping on. But yeah, hopefully you guys have gotten value so far. If you have, definitely don't forget to like the video for me. Subscribe to the channel if you haven't already so you don't miss when we go live. These calls and the Sunday calls are priceless. That's not to toot my own horn or be braggadocious or whatever, but this stuff just works, and I've proven it publicly now for 2.5 years. So, I mean, there's really not much more to say about it. There's nothing negative that could be said about it, because the chart speaks. The analysis speaks for itself. And many of you that have been with me, you've been able to see this put on display. And those of you in my private group, you get to see the real extent of this skill set that I share with you guys and how consistent it is, which is every single day. because we are live every day. Every day, every day. So, yeah. So, again, with that being said, what I'm looking for in this on this 15-minute chart, we see that rejection block and a large wick. We see this next candle could not even reach into the midpoint. That is a pretty good sign the price is going to try to retrace to now this PD array here. The rejection block and the failure to really spend too much time in that wick, it's pretty telling. We do have this gap in here, slow fair value gap, but we do still have to contest with this being a market maker buy model in itself, which is again potentially part of this bigger one. This was a smaller buy model, right? Like if I just had you looking at this here, right? This is all we were looking at. Regular trading hours gap that's available, right? Above, like I pointed out. Wait a minute. Oh yeah, so yesterday has a big one. Yeah, we've already been identifying that. It was right there. So we got all of that available. And again, if this is all we were looking at and price gets beyond this high to that low's 50%, it's a pretty high likelihood that this is going to reach up into these upper levels. And we have accumulation on the left side. 1, 2. These are really close, so many times I take that as a full range. But you really could just use this little range. And look at how precise the 50% of that little accumulation. Look at how solid that is. It's just like hitting it and refusing to go lower. It's very intentionally doing this. The body closures stay in the upper what? 25 to 50%. And then we get small stop run, displacement. This is anchored in the bullish breaker too. You notice how it didn't come back down into the breaker? It left it open a little bit. This is a balanced price range, but so is all of this sell side to buy side when this displacement took place. There's sell side and buy side happening in here. And then you get full displacement, shift in market structure, change in state of delivery right there with the stutter candle and consecutive candles. So that right there was an early sign, along with the fact that this is also in a larger breaker that we identified. So coming down into this, if we're thinking market maker model, the expectation, we walk forward anticipating and expecting, not reacting. We're expecting and anticipating that these things in price, because of all the experience we have looking at this stuff, we expect it to unfold this way. And then presented us with a market maker buy model. So again, when a market maker buy model is completed, that whole range now becomes a BPR. So if we're going to continue to trust that this is going to keep going higher, what does price have to do to help support that idea? Well, we need to stay in that upper 25%, preferably. Once it starts breaking through, say this low, and we get below the 50%, things may shift, right? And then you may have to go from this low to this high, assuming that it gets down into here, right, as a hypothetical. If it does do this, that means that it's closing in the regular trading hours gap that it created down below, which I wouldn't put it past them to do because we're in consolidation. Early signs of that is, of course, the wick here, the rejection block not even being traded into. If it shoots another candle up into that, tags it, and then continues to drop, and then we invert this, right? It can't even close above the 50% once it overtakes it. Once it closes below this fair value gap, that's an inversion fair value gap, a confirmed inversion. And in that case, that may lead us to then targeting this as it looks to fill in the rest of this as a market maker sell model. We go from buy model to sell model in that case. Just further reinforcing the idea that we are always in a market maker model. This consolidation, price went higher. If it ends up actually targeting these relative equal lows and failing to hold this upper 50, upper 25% of this current potential buy model that it may respect if dollar keeps declining. If it does break through 50% from this low to that high, and we close below these levels and some of the things I just mentioned unfold, this in itself, this little piece of that fractal we're identifying, may in fact also become a market maker sell model, which is part of the smart money reversal potentially of this one being a sell model as well. So there's one in here simply for the rally up to then decline if that's what it chooses to do. And there's also one here from that low to that high in the larger perspective. Outside of that, again, we have a buy model that unfolded. Then you get the bigger range, you have another buy model, right? Overall. So again, this is a beautiful example of the statement that we're always in a market maker model. This run higher to go lower, right? That retracement in this move that ended up going lower, that idea in there can also be seen as a market maker sell model. This little move in here, right? This retracement on the 5-minute. If I was to go to the 1-second chart or 5-second chart, this is a market maker sell model. Okay. This right here was potentially a market maker sell model. Right? So on and so forth, right? This low, high to that lower low. That's a market maker sell model. You see the previous order block in there, right? This last down candle right here. Hopefully you guys can see that. Look at the respect once it broke through it. It treated it as an inverted order block or a inverted balanced price range or accumulation turned distribution as it looked to complete this market maker sell model. And this is just simply, again, a retracement on a larger perspective to reach lower into the levels that we were talking about. So what do you think I was thinking when I saw this go up and then go all the way down to this level? Possible market maker sell model. We hit midpoint. But what happened? We've now broken back above that midpoint that would have supported continued downside if it stayed below. We've now broken that, aggressively repriced above it, and now we're setting up a potential buy model in here to target the highs. All of that is working inside of this consolidation on the daily chart. It's working inside this little range in here. Right? So this is how I view price. This is how I see things every day. And there's always something to do because, again, we're always in a market maker model. We're always in a power of 3 delivery. Always. It never fails. Like to show up. Sometimes you'll get it wrong and you'll fail, but it's constantly happening. And it just kind of depends on your style. That'll determine what time frames you'll want to see this stuff on the most. And then the pairing of time frames that you use, whatever are your favorites, that's going to tell you what time frames you're going to want to look for this on. But again, hopefully this is pretty confidence boosting and encouraging, like giving you guys somewhat of a nudge if you haven't been taking market maker models and Power 3 seriously. If you know a basic understanding of the concept, you don't know enough. There's lots of advanced levels that you could take these concepts, just like what I just showed you here. This is an advanced view of market maker models, seeing how often they're in price. And when you use the bias and narrative process that I share with you guys every Sunday, and you can solidify what the direction is that you want to see price go in on a weekly, monthly, quarterly basis, it's spectacular, right? It aligns beautifully. And this just complements what we do every Sunday. All of these live calls we do are assisted through what we do on Sunday, right? Yeah, let me know one in the chat if everything we talked about right now makes sense, or at least the theory of it makes sense. You may not fully be able to say, oh yeah, I'm perfectly in alignment with this. This makes absolute sense, and I'm going to go trade it right now. You guys may not be at that stage. You'll get there the longer you stick around here and the more you backtest these things that I point you to and watch the videos I tell you to watch for ICT and stuff like that. But it's going to take, you got to be patient, right? You can imagine with just the depth of perspective I just gave you about the market maker model, right? You can obviously tell that there's a lot to this stuff. There's a lot of things you could study, and there's a ton of examples every single day, right? So I want you guys to really get comfortable with back testing one piece at a time, because everything comes together. You know, once you study all the different components, but market maker models and power three theory, and it brings everything together in a organized, structured fashion. And it becomes at some point hard for you to think that you can't be successful at this. You know, the concepts work. Price always shows us every day that this stuff is ridiculous. Okay. There's not a lack of opportunity in study material or entries or frameworks to build, but you as the trader need to be seasoned. And experience only comes through what? Doing it. Doing it and having time, seeing the stuff from the right perspective. And you can't really, you can't replace experience, but hopefully everything we've talked about so far makes sense. The initial objective we looked for to get targeted, which was this up here, the regular trading hours gap, has definitely been contested. You see how we're staying in that upper eighth level? Unless it starts to violate that, dollar's continuing to go lower. We got a very obvious target. That being the gap down there. Well, not the gap, the lower wick here, equal lows. If that keeps happening, we're going to keep going higher. I'm not bearish whatsoever at this moment. You know, we still got these equal highs up here that I think are pretty logical target. And if we can't get up there at a minimum, attempting to fill in the rest of this regular trading hours gap seems very, very logical. Bavine says, theory, yes, we'll match market maker and power 3 videos on your channel. Yeah, 100%, bro. I'm telling you, if you live there and take some of the stuff that I talked about earlier with that list, and you make it your objective to get a process, to learn a process about every single one of those things, which again, you know, you learn a lot of that stuff here. There's also ICT videos that I think are really, really good. I'll never take away from ICT as an educator. I just have a perspective that is helpful because, you know, I'm a different person. So the message gets communicated in a different way. Sometimes it's a little bit more stimulating, a little bit more easy to understand, because ICT's style of teaching doesn't necessarily always mesh. But he's still spectacular. He deserves all the credit. And I mean, he's even said there's going to be students that master what it is that they're doing in price using his concepts, who could communicate the teaching in a little bit more of a digestible way. You know, and he says he doesn't have anything against that. He knows that that's going to be the case because he's not the best mentor, because we all have flaws. Shit, I'm not the best mentor, but I do have perspectives that over time I've been able to build like education around, right? Or like a style of educating when it comes to these concepts. And what I've been able to see influences traders that come to me to learn faster, right? You still want to have the basics. You'll never be able to get away from the foundations like Power 3, the 2022 model videos, the conceptual ideas from ICT's 2016 stuff. If you just learn like 5-minute trainers from people on social media, because they're claiming that things are going to be done quicker or you'll learn faster by skipping some stuff, you're going to realize over time that you wasted your time. You know, it's like trying to be a doctor not wanting to go to college because it takes too long and you just learn off YouTube. Like what? Like you may be able to get some good information, but you still want to have the source um, and the in-depth details. You at least want to be aware of them. And again, I'm very detailed. So the stuff you learn from me, you're not getting half-assed stuff. You're getting like straight to the point, like what is important and why, and how you can apply it. And you get active every single day application of all this stuff, and the ability to ask me questions, obviously. And I'm always here to help. So yeah, with that being said, we are now at 6:30, so let's start to pay attention to what's going to take place in here. We do have a potential bullish breaker unfolding, but again, we got to pay close attention to the 15-minute. Yeah, we got to pay pretty close attention to this wick here. So this wick and this rejection block, remember what I said a second ago? This wick is a rejection block as well. So if we stay below that lower half, lower 25%, and we were to send a candle up into it and it was to reject away, that's a sign that it may not want to keep going higher. We're fully confirmed that that's not going to want to go higher once we close below this fair value gap. That'll put this in jeopardy, and I would believe that that's going to be targeted pretty rapidly. Got fib extensions up here. So if we don't close below this and we start to really break towards this high, a closure above the midpoint of this and a real failure to continue this rejection from this rejection block, right? If we can get that to happen and we're staying above the upper 25% still, which currently we are from this high to that low, the previous buy model. If we get this to run up here, we could rest assured that this is most likely going to be targeted. Again, this high is a previous, it's liquidity from last week, but we're just in a nasty sideways range. Right, failed sell model in here. We had a failed buy model in here. It set equal highs up there though. And then again, a failed sell model, and now we're having a buy model unfold potentially to get us up here maybe. But we'll see. Clean this up a little bit. So again, like I said, that previous day's close down there. All right, we could see there's a huge regular trading hours gap. So what is available currently for inefficiency? We have the upper part of this previous regular trading hours gap, but now we have all of this that's available. So we got buy side offered, sell side offered. So we're starting to balance out this upper piece a little bit, but it's referring to this stuff. So I could say also that if we get this retracement and we hit this gap and we start to, again, displace while refusing to come back to the midpoint of this regular trading hours gap, regular trading hours gaps are a PD array. So if that is the case, when we're respecting the upper 25% of a particular PD array, and we're assuming that we may be bullish, as long as we don't hit that 50%, or if it just meets that 50% and keeps going, leaving that lower part available, and then price starts to set things up going to the buy side, you could rest assured that the rest of the session should be able to be bullish. At least the AM session. And the PM session chooses to, kind of go against that, look, and maybe looks to fill it in, so be it. But this is how you can use the regular trading hours gaps for bias navigation too. So it looks like we're setting up that market maker sell model that I said could be a possibility. We do got a breaker in here that was offered. Again, we're too close to the open, so I'm going to let this kind of go. You could have been aggressive and engaged something like this. Clearly, it was a breaker. Clearly, it respected the upper levels I talked about. Said if it proved that it wanted to respect that rejection block, which it did, right from this low here of this measurement. We're also refusing to get up into the 50%, staying in that lower. Look at the precision on that. It's the lower eighth level to the tick, which again, that's also a large wick that got traded into and remained bearish. It's a rejection block. And I believe, yeah, we're at equilibrium there for that larger range from the high extreme up here to the low extreme. And it's also inside this wick right here. You see this as a PD array as well. It's a new week opening gap. Let me actually make sure that that's on the chart. So that's a new week opening gap that I overlooked. So we got a reasonable amount of things in this area, coupled with that rejection block in the wick, that's holding price, at least for now. So we got to see what happens with this fair value gap. Again, if we get a closure below that, that's how you confirm a inversion fair value gap. But if it just wicks through it like this and closes above the 50%, that's not quite confirmed as a inversion yet. It still has a chance to keep moving up like that. So we got this order block. This is a momentum order block. Got a order block with a wick that displaces through it. So if it's going to be bearish, it's going to have to respect that lower portion of the wick. This is coupled again with the rejection block and the large wick level. Another momentum order block view. May also have one here too if it closes. If this closes with this and we close below the midpoint or below the low of this inversion, again, that sets the stage for something like this to be attempted. So again, I'm just in a mode of waiting. I'm going to wait till the macro comes out, let all this stuff unfold. We also have news at 7 a.m. So it's probably even best to just wait till that 7 a.m. comes out and then make a decision on what you're going to do. See what's available. You see how the closure below this inversion has not taken place? You see how it's not allowing lower prices? It's still valid as a fair value gap bullish. So we're trapped in between two PD arrays. This, well, three. The wick, the rejection block, and this fair value gap. So one of them is going to have to give up. Right? It's either this that's going to give up and we're going to go lower, or it's going to bounce up through this. We're also at equilibrium. So again, it's by default 50-50 when you're at this type of level. But we have it cornered. So regardless of what it chooses to do, we'll be able to adjust. If we can get this to go up through this level, again, our target up here that we've had outlined is right there, the regular trading hours gap from yesterday. And then for today, right, say it does rally up in here, but respects this and then breaks down once more, eventually closes below this. My objective will then be the trendline liquidity here, relative equal lows, along with the rest of the regular trading hours gap. And if it closes through this, or if it closes below this range in here, we may have a market maker sell model framework. But for now, if the dollar is going to keep going lower, we could more so lean more towards the upside objective. So if I was to go out on a limb with a gun to my head, I would be basically trying to see if we can get this. Given what we see so far, unless we lose this wick and this inversion, or lose this fair value gap and turn it to an inversion, you know, we could still see this rejection lead to price continuing to go up. Look at the body closures. If we close up here, we're closing well above. We just came back down to balance this out once more. So this in itself, with this large wick going lower, if we close like this, can be treated as a BPR in itself. This right here is a balanced fair value gap. That's why it should not be met. We have two, but it shouldn't come down to this. Why? Because there's a wick, buy side, sell side delivery, buy side again. So there's a wick in there that offered both sides. There's a couple of them. So there's been work done inside this fair value gap, which as a result leads to price leaving these levels available. But then, you know, in a very close way, like similar to this is not happening over here. This didn't send a wick through this, or this didn't send a wick through this. So it has the ability to trade through the fair value gap, but on a closing basis, we want to see it stay above if we're going to be bullish. Okay. So again, I hope all this stuff makes sense, you guys. So I'm just waiting. I'm not concerned. I am looking at these lower time frames, but I'd like to see something on this time frame show up in a very strong way before we really look to engage the 1 minute or lower time frame. So we're keeping tabs on this. There's really nothing to do, at least for me. And if you want to be aggressive, that's your prerogative. I'm not aggressive on CPI weeks. It's going to have to come to me. Do what I'm telling you to do, or I'm not going to engage. It's basically my perspective. Again, we're at this equilibrium. Look at how nasty that equilibrium is. It's refusing. Look how many touches. Look how many times it's touched it just in the last couple of days. Look at how sensitive it's been. It's like a brick wall or a massive magnet. And price is trying to get away from it. But it's like, nah, bring your ass back. So yeah, again, we still got this. We're still observing that. So that is still being treated as a BPR. If it breaks this low here, we now have another BPR. Low, high, lower low. So this down candle here, I would expect if it displaces through and we do get that closure on the higher time frame inversion, I would expect to see this act as a bearish breaker. It's also a bearish order block, right? Once it closes below or just simply wicks through it. Preferably it closes, because if it wicks through it and comes all the way back, it could be an issue. But I really do, at this moment, with what we see, putting the buy side on the back burner for a minute. If we get below this yellow box and below this low, again, we have buy side, sell side. And then we also got a BPR here, anchored in the rejection block we talked about. Whoops. What the hell? Okay. It was a 15-minute, right? Yeah. You also see this accumulation over here. If this displaces through that, you can expect that should act as accumulation turn distribution. So maybe you don't trust it in here, even when it breaks through that. Okay. Once it breaks through that, you could look at this or consider this as a potential BPR. And then this can be where you then try to find your model unfolding. Right? Market maker models, you literally can use the theory on these lower time frames as a model for entry in itself. Whatever phase you like, first stage distribution, second stage distribution, that one's my favorite. Low resistance happens a lot from that when you're correct. Maybe you like the accumulation, right? The setup of the move, right? The manipulation part. Maybe you like the smart money reversal. Wherever you feel comfortable, you can make it an entry point if you can just simply merge some other PD array that forms around those levels. Like maybe a breaker forms in here below this potential second stage. So yeah, watch this high right here. We're still respecting this fair value gap. If this breaks this high, this is what I call a type 2 dealing range. This may lead to us then getting up above here if we can close above this, especially if it's aggressively repricing. This is a high, low, high failure swing. So I'm going to move this actually up to here. This is a mitigation block. If it can displace through that high, it's a type 2 dealing range. So this high gets taken. This high becomes high probability to be swept. So that's basically where we're at right now. We still got news in 15 minutes. So it's a bit risky to try to engage something here, but let's see if this unfolds, right? We're above this. We should end up getting up here. You see the failure in there? So again, when price is telling you something, you can't be too demanding, right? You're not going to force your will on the market. You have to go with what price is telling you. This basically said, no, I'm not going to set that up. I'm not going to break through this fair value gap. And now it's broke above this high. Again, this is type 2 dealing range. It's also a mitigation block, bullish, instead of being a breaker. And we're now beyond the midpoint of this breaker. So that's now less likely. So let's see if we can respect this upper area. Preferably we stay above this. If it comes all the way back down, I wouldn't consider anything in here. And again, I'm waiting for the macro. We're inside of a macro and it's setting this up. Dollar is still going lower. It still has a little ways to go. So that supports this unfolding this way towards the high. If we can continue to hold inside this fair value gap on that 15-minute chart. Look at those body closures. It just simply looks like that was manipulation and the body's telling the story. But we are kind of stuck, right? Somewhat stuck in the mud in here. It's typical, right? It's to be expected. So that's why we're being cautious. We're not aggressive right now. Okay, so we blew this out. So my consideration for that is now put on the back burner and I would have to wait. I'm going to wait. We're inside of a macro, but does that mean that you automatically need to find a setup? No. Let price show you your model. One thing I can point out is now this candle here. Well, technically these two. If we get displacement through, we may use that. So now we got buy side, sell side, buy side, sell side. So we got the midpoint down there of this regular trading hours gap. So we're just in the middle of the range. So let's see what this wants to do closer to this news event. Clearly, it looks like they're going to do what we anticipated they might do. Hold till the secondary news comes out. So I think I'm going to hold my gunpowder until a little bit closer to 7 a.m. Oh, you guys can't see my little clock down there. Shit, I'm gonna have to fix that. Wait, what? I don't know how to. I don't know what I can do to. Yeah, I don't know. That's annoying. I didn't even know that you can't see that. The little time down there. You could see, yeah, you could see that. I guess that's all right. Yeah, that was weird. I didn't even realize that. That little time down there. I was referring to it. You guys can't even see it. I'm gonna have to fix that later. All right, yeah, so these lower time frames are being a bit sketchy. Let's see, where's our first presented fair value gap? Let's see. Okay, so we got our first presented fair value gap right there. So that's going to be important as well. So yeah, if we get down below that, it may be used to try to come down and take these people out. Anyone that's been in position since the CPI announcement, they're hanging on by a thread. Their stops are below there. I'd really not be surprised if they just wick down into that. If they were to go higher, if they were to wick down into that, sweep that, and then just aggressively reprice. This inversion fair value gap here, which is again the first presented fair value gap, may be utilized, right? It may drop down, return into it, spike down into this, and then look to go higher if it's going to choose to go up. But we already have accumulation, some manipulation in here. Question is, are they going to give you a second manipulation? You know, if they are truly going to try to go reaching for these upper levels we talked about. All these extra lines in here, it's just new day opening gaps, other new week opening gaps. There's like 2 up here. See something real quick. Yeah, there's a couple of them in there. But that's just a very concentrated level of new week, new day opening gaps. So you could imagine that that's probably going to be a little bit of a chaotic area for price to really run through. And if it does run through it, and we're going to look for it to go higher, we want to see these levels act as support. Just like supporting ideas. Same with these down here, right? If they were to break through them, when they come back into them, we use them as continued gripping points in price. Okay. That's pretty much how you want to look at it. Typing this out when you send it. It's a tiny one. Inside of that 932. Okay, you guys don't have any questions? Let me know if you guys have any questions. So yeah, let's watch and see what this does here, what this first presented. I'd really enjoy if dollar's going to get down below here, which I think it's going to be able to do. That's why I'm leaning a little bit more towards this upper level getting taken. I'd really enjoy seeing that. We got 1, 2, 3. It's engineering liquidity here. But again, we're clearly respecting this 15-minute fair value gap. Make this a little smaller. Actually, no, let me just pull it a little bit closer. Yeah, I don't like these equal lows. Really didn't do much. I mean, it peaked below it a little bit. But again, the dollar, first rule of high probability is market symmetry. And it seems that the dollar is trying to really reach lower. We got the yields not necessarily doing anything too crazy. We do got this overall analysis we did on the bonds still unfolding. We have reached down below the sell side there. Technically, there's a slight SMT. But again, the bonds and the yields, they're sideways. They're really not interested in being too aggressive. The yields are somewhat being aggressive. But whenever the bonds and yields are a little bit chaotic, it's going to cause chaos in the dollar. And then that, as a result, leads to messy conditions and a lack of the ability to trend on the other assets. So again, whenever you see that, it's used as a a gauge for the condition, which then is used to help you manage your risk. Is it a day to push aggressively? Is it a week for you to be a reckless gambler and come out here trying to swing for the fences and pass every funded account, or you know, find trades to retire on? I would say no. Your success is going to come from success over time. It's not going to come from 1 or 2 days. It's not going to come from today's success or failure or tomorrow or even next week. It's going to come from years. Now, you may get flash in the pan wins here and there, especially if you're really pushing it in funded accounts. But again, you got to have your objectives. You don't want everything you're doing to be random, like, oh, maybe I'll get it, maybe I won't. We don't run off random or maybe. I got to be as close to certain as possible when we look to engage. And it comes from being very organized in the way that we are. It also comes in knowing when not to do anything. And today is a beautiful example of, let's not do anything. Let's wait. I mean, if you guys didn't take a trade, and if you think that if you weren't on this live call, you would have taken a trade, hopefully it feels liberating to know that there's nothing to do. And now that you're seeing what price looks like, there's nothing to do. So you basically saved yourself because of the rules that I teach you guys and the perspective around these particular news events. Now, all this may change in the next 3 minutes because we have a big news event coming out. We got Mr. Warsh getting ready to unload conversations probably about the likelihood of interest rates being hiked. Hopefully they decide not to, because if they hike rates, you can expect that these assets here are going to really want to reach down for some of these lower levels. And all of this, I mean, look at that rejection block. Isn't that beautiful? Isn't that beautiful? Look at that. Didn't we just use something similar to this on the lower time frame? Didn't we just use that right here? It's interesting how this stuff is fractal and repetitive, right? Using it from these upper time frames, you could use them for swing trading. You can use it for verification for a lower time frame direction you're looking at, right? It's magical stuff, really is. Yeah, we'll see what happens in the next 2 minutes. Again, we're still respecting this. So until it breaks this stuff and it inverts, say this first presented fair value gap, breaks this low, we've had a lot of trading in here. So you can rest assured that if this does end up breaking through this engineered liquidity here, this high to that low can be classified as a balanced price range. So if it displaces through it, the expectation should be that it stays in that lower half. In this case, stays below this fair value gap, but for surely stays below this range, lower 25, lower 50%. And if we can get it to go down there, again, we got our target. Not only this liquidity, but we also have inefficiency. So price is only attacking one of two things, liquidity or inefficiencies. In this case, we may have both laying on top of one another. So that's a very significant level, or a significant argument for this level to be targeted if we break through this level here. And say dollar was to rally up. But the same thing's true up here. Right, we got relative equal highs deep into the highs up here. We have a buy model. So we have liquidity, and then we also have inefficiency here and here. So regardless of what it does, whether it takes this low out or if it breaks above here and then targets up here, we still have a layered approach from inefficiencies to liquidity on top of one another. If we get above this high as well, that becomes a bullish breaker. So pay attention to that. High, well, low, high, lower, low. Refusal to break this 15-minute fair value gap. So this 1 minute bullish breaker is supported by the higher time frame or well, not super high time frame, but the larger range, right? We have a buy model, we have inefficiency, we have equal highs, we have dollar crashing through these lows. So that's going to be supportive. And remember what I said about this. In that larger buy model we're looking at, we're really accumulating inside that previous accumulation, which is right in here. So it's accumulating in that level. It's not entirely smashing through it. Until it smashes through it, it still has a chance, especially with the dollar crashing lower. There's a correlation problem if this goes lower and the dollar continues to go lower. So is that high probability? No. It's low probability. Can you engage low probability? Sure. Should you want to at this moment with CPI? No. You just invite the likelihood of potentially getting it wrong. And depending on how you feel about when you get it wrong, you may stop yourself from finding something way more worthwhile to engage. So yeah, we're really refusing to break above. We're still hanging around this little gap in here. So for the moment, we're trapped in between this rejection block reaction and this 15-minute fair value gap. Remember, if it closes below that, that's my trigger to believe that we're going to target these lows. So we could then look for something to target sell side and the rest of the gap down here if it does do that. We're now below that first presented, so let's observe how that's going to be treated. Again, if it's bullish, it's going to have to at some point, like in the next couple minutes, really aggressively run. But seems like right out the gate from this news event that just took place, we're starting to show commitment to fall lower. Yeah, we have a pretty horrible correlation going on right now. Rejection block in the S&P, relative equal lows. I mean, that's super obvious. Same with this. Not so much in the Dow. The Dow is going to have high resistance to break through. Stop run. Failure swing, equal lows. So yeah, I'm wanting to see if we can get down to there now. High risk, very high risk in here. So you got to decide if that's something you're okay with. It's going to have to really respect this like right now. Should not come back up and close this gap in. So that would be my extreme there and targets down there. Oh, why is it not accepting my order? You gotta be kidding me. What the fuck? Dude. What is happening? It's not letting me get into a trade. Shit, I better be careful. Watch it put like 10 entries right now. Well, that's annoying. So I guess it refused to take my order. It is what it is. What a shame. That was such a good move. Yeah, I told you guys, once it gets below this, I said it should react quick from there. Looks like we were correct. Oh my gosh, why is it doing that? Yeah, that is a pain in the ass. But hey, that's how the cookie crumbles sometimes. So yeah, once it got down below this inversion, like again, I was calling for it to hold there, stop above there. I mean, that offered like 100 points already, I think, from entry. Oh man. What a freaking mess. But that was beautiful. So I hope you guys were able to take that context. Hope that makes sense. It made sense to you guys. But that was beautiful. In a macro, just didn't want to accept my order. You know, I could mess around and try to get it in here. And I don't like to short with the dollar shorting. At any moment, it could flip back. But this looks pretty logical. Looks like correlation's not really being used. I mean, there's a massive crack in this. So if we get back above this 15-minute fair value gap, back above this first presented fair value gap, you know, that would not be ideal for continued shorts, especially with dollar continuing to tank and the other indices looking to rally. Seems the S&P and the Nasdaq are having a hard time. We have a SMT here. The indicator's pointing that out. Ugh, dude, that is so irritating. Didn't want to take my order. Makes me worried to take another trade because what's going to happen? It's going to not let me get out when I take a trade. Like, if any of you guys trade AMP, if you could let me know if you're having any issues today, I'd really appreciate it. Maybe it's a platform thing, or maybe it's just on my end. Yeah, when the first presented fair value gap is like super tiny, like this is not tiny. This is a really reasonable size. Now, if it was like this big, yeah, you want to get the next one that's big. But this one right here is a very reasonable size. It's got that volume imbalance in there, so you have to account for that. Be a little bit small in there, but that's still a reasonable size. Oh, really? Yeah. Where was it? Right? Are you talking about in there? Oh no, that one right there is right at 6:30, so you can't use that one. It's got to be after 6:30. Right at 6:30, it's not. You can't use it. It's not part of the rules. It's only when it's after. So it has to be from 6:31 and beyond. So the earliest can be from 6:31 to 6:33. Right, that 3-minute interval. Oh man, what a mess. What a freaking mess. Literally refused to let me get in the freaking entry. Like I said, this is reasonable in here. Probably could have tried to get into that, but I'm not gonna lie, with they refusing to take my entry, refusing to take my order when I clicked a million times, still hasn't populated it. A little sketched to engage with my broker right now. So I ain't trying to be caught up in a trade that I can't get out of. Won't even let me get in. Again, this is another risk around CPI, NFP, FOMC. This type of shenanigans can happen. Maybe AMP is targeting me, right? They're like, tired of this guy winning. We need to stop him. Yeah, that was a beautiful entry. This is reasonable too. I just don't like the dollar going lower. If the dollar wasn't going lower, this would be something I'd be willing to engage. But we got cracks in correlation. S&P and the Nasdaq are moving together. They're just all moving with the dollar. All U.S. assets, because of whatever Warsh is saying, at least between the indices and the dollar, they're continuing to push lower. Got the currencies rallying. So again, there's a crack in correlation there as well. So like I said, when we get down below this, we should see speed and distance from this level here, because that's a potential distribution level. Again, the only way that I would be looking to buy is if we can get beyond this first presented fair value gap one more time. For now, though, this looks like it may want to come and reach into this. So I'm not thinking buys at all until it gets up into here. That would be my line in the sand. But we're respecting this area right in there. What the fuck was that? Freaking Siri, listen to me. That was strange. They're freaking watching me, I'm telling you. They partner with Apple to track what I'm saying. Could just simply watch on YouTube, right? All right, so we're now at the midpoint of this regular trading hours gap. So let's see what happens. We're at the silver bullet time window. We somewhat got the 7 a.m. reversal. So again, it's still just kind of a nasty environment. Lots of things going against you for high probability. So we do got SMT in there. So if this ends up above this first presented fair value gap, that'll be supported by the SMT. But until it gets up there, we don't pick bottoms. And I would like to see it commit a little bit more. It didn't let me get into my entry in here. Literally 100 points, pretty much 80 plus points. Just didn't engage my freaking order when I was trying to get in. So when stuff like that happens and you're frustrated too, you got to be cautious. Yeah, Z, I was kind of concerned. I was clicking a bunch of times, and then as I was thinking about it, I'm like, oh shit, they're gonna put me in with like 1,000 entries, but they haven't put me in. So for whatever reason, it's just completely denying my. I'm like scared to take a execution right now, because I don't know if this is gonna bleed into me getting out of a trade, or moving my stop loss, or adjusting the order. So that's unfortunate. These are things that you can't control, really. You know what I mean? It's stuff you got to face and get over, deal with, but it is what it is. So yeah, this is all continuing to drop like I assumed it would. That was a perfect entry. No drawdown. This one's pretty good too. Again, this is a BPR. I said that once it breaks this low, if it's going to keep going lower from this high to that low, all of that lower 50 to lower 25% should act as a balanced price range. We're also now fully inverted when it comes to the 15-minute fair value gap in there. So we're actually tapping right into the market maker buy model from previous, upper 25%. It's a really big run right there. And these equal lows look very, very nice. I would just really, really like to see the dollar run going higher with this. But it is what it is. So again, this right here is a distribution level to pay attention to. Like I told you, looks like it's going to be second stage. Give us a real acceleration here, as expected. Yeah, right there. That speed, that tells you that you're correct. that this is a market maker sell model. So yeah, we should not really get much of a retracement at all. This midpoint should be respected. This up movement, down movement, lower 25%, the large wick with displacement, inverted fair value gap. If you didn't take this entry I talked about, this one right here, that was beautiful. And again, I haven't said anything bullish at all. And I even talked about this well in advance. If it gets below that, watch to see that act as distribution. And we could see that it has. I'm very salty right now that it denied my entry. It pissed me off so much. And then that kept me away from this. May not be showing it, but I'm fuming right now. It is what it is. Ugh. How irritating. But honestly, we could still say, whoops. We could still, in a valid way, say that this move was called out. Said stop above that. Targeting this, targeting this. Whatever the case may be. Oh, dude, 152 points. It's like $3,000 or more. Thanks, TradingView. I don't know if it's TradingView or if it's AMP, but both of them are kind of playing games. Doesn't happen a lot, but what a time for that to happen, right? 150 points offered. Really? Really? But can't be too upset. It's not the first, won't be the last. It's very common. And that's just like really pathetic that it didn't let me get in. Hopefully you guys were able to, though. Of course, this ain't financial advice. I would encourage you guys to take my trades because I'm not a financial advisor. But hopefully this made sense to you and at least had value in terms of study and amplification for the efficacy of what it is that we do and the skill set that we have, the intuition that we have to wait. Remember, all of this stuff started from this rejection block. Now, I said that the only way this will go higher and for us to be bullish is if we were to take out this high. Did that ever happen? No. Talked about when it breaks down through this low here or below this first presented fair value gap, it may be used to go lower. Offered an opportunity there, offered an opportunity there. Is it going to offer an opportunity here at this fair value gap too? See what happens. I think those equal lows are just too nice. Ooh, we did tag a little bit of it. Yeah, this right here, I think they're going to look to blow that out. I don't think they're going to want to leave that available. They're already so close. If they do leave that available and they aggressively reprice up there, it's just going to be another example of them gravitating back to equilibrium. Refusing to give full follow-throughs. It's given partial follow-throughs. But again, this is a beautiful, beautiful trade setup. Hey, if you guys could put in the chat that you saw this being sent out, say, yes, I saw it, or yes, that was called. Just so we could let people know. Or if you guys took a trade setup on it, which is even better, right? If you guys could share that in the free Discord, or if you're in my private group, share it in the private group. You guys know I like to see your successes. So let's see what happens with this. Is it going to continue to remain aggressive from that, I mean, it really only needs this. If the underpinning of the market is going to be bullish, we may see this. All it needs to do is tag this, because again, we're still inside that larger narrative. It's just really deep in there. When it does this and you're in a buy model or you're expecting a buy model, it's very risky when it breaks through this, right? Because that's the whole range, right? We want to see in that upper 25%, upper 50. We want to see price respect that. But now that we're so deep, we're going to need it to aggressively start to confirm that it's not going to in fact fail. In this case, though, you would assume that, okay, it's probably going to fail to deliver the market maker buy model. But we'll see, right? We're coming back to that balanced price range. You see how it's high resistance, right? It's treating it as high resistance. It's not just sliding through aggressively. So we may get this thing to revisit a little bit. I would like to see us stay below this green little zone in there. That's, again, the previous accumulation. And again, if we take this high up here down to that low and price gets beyond the 50%, you can expect PM session is probably going to look to wipe some of this out. We only have a little bit more of this regular trading hours gap available. Okay, so right below that low. What in the world? I'm getting all kinds of errors. Can you guys see everything okay? What the hell? YouTube is tripping. Yeah, see everything fine. Yeah, I don't know what the hell YouTube's talking about. Yeah, well, as long as you guys could see everything okay, I'm not too worried about. What the hell's going on with YouTube? What? It's been weird as hell today. Okay, yeah, that was, I guess, pretty short-lived in here. So yeah, it just barely tapped below that low. We still have massive equal lows down there though now. But for now, we'll be observing this. Okay. Let's take a screenshot of that real quick. So now we may have a bullish breaker that unfolds in there. So I'd watch this little area in here. High, low, higher, high. So if it's going to be bullish, we should stay above this level here. This little range in there. So to confirm that it's going to keep going lower, it's going to have to break through that aggressively. And in that case, you could then look at this fair value gap. If you were going to try to catch continuation towards these lows, you'd then be able to pair this inversion or this reclaimed fair value gap. We also have a bearish breaker too. So maybe you want to wait, right? Let that unfold, let it punch below this. And then when it returns back into it, you could use it as a bearish breaker. We have a bullish breaker here and then a possible bearish breaker. We have a high, low, failure swing, breakdown. So this low, this last candle, it's not only the a part of the inversion on the 15-minute, but it's also a mitigation block. High, low, failure swing to break that high, displacement. So this is as far as we're going to allow it to go if we're going to continue to be bearish. If it breaks through this, this may be a little trampoline and send it up to the buy side liquidity. In that case, again, we got seek and destroy CPI conditions. So it's more tricky to trade. You know, should you be scared of it? No. But you got to manage your risk. You know, and again, this is the best idea. The only idea that I called today was this. You could have been a little bit ballsy and took the rejection block in here. But again, what supports that idea other than, you know, the PD array relationships? You know, intermarket relationships didn't agree. So it's a little bit aggressive, really aggressive, to just engage that, at least for me. You know, what was this green? Okay, that was the regular trading hours from previous day. So that's pretty interesting. Very interesting. So again, this idea, notice what's in alignment, right? We're in a macro. We didn't have intermarket relationships. We had the S&P supporting it, but now look at what's going on now. The S&P came off that low aggressively. That is not a sign that the S&P is going to continue to be bearish. And if we can't get the S&P to remain bearish, say it stays in a consolidation, it's a very weighted indice. It's going to cause a real issue. We do got the DXY somewhat running in here, so that's interesting. But we had pretty reasonable amount of things promoting this idea to go lower. And of course, I was being very, very cautious. We saw this breaker. We came off the rejection block. We came off of the midpoint of the equilibrium on the higher time frame. We got the inversion fair value gap that price confirmed once it closed below, which also in itself could have been used as an entry if the initial one using the first presented fair value gap was not something that you're comfortable with. So you had two opportunities at the lower portion of this inversion. Again, all this stuff has been talked about real time as I've been with you. Nothing has been just in hindsight talked about only. You know, we talked about this whole thing, and those of you that have been with me this whole morning have navigated all this with me. So again, hopefully you guys have learned a lot. If you have learned a lot so far, don't forget to like the video. It does a lot for the channel. It's free, right? And it really does help the channel grow. It gets me in front of more people that may need help. You know, and that's why I do these live calls on YouTube and in my private group. But my private group has obviously a lot more activity and a lot more access to me. So the private group is a private group. But you guys get value here too. I have many of you on YouTube that are making ridiculous progress just from being on YouTube, so much so that you haven't even joined my private group. And that's amazing. You know, but for those that need that extra help, I have a QR code up at the top of the screen if you want to scan that, or you could check out the links in the description if you wanted to join me in my private group where we go live every day. You know, we're constantly engaged. And yeah, just more access to what you see us do today and every week. And then if you want to work with me one-on-one, you can DM me and we can have a conversation. But yeah, you have lots of resources here. And my YouTube channel is just going to keep being packed with a ridiculous amount of value because I like seeing you guys succeed. It's the only reason I'm even public. It's fun. I get to kind of relive my early moments where I had no clarity at all, but then started to slowly understand what it is that must be done to get to where I was trying to go. So yeah, did any of you guys get a chance to engage today, or have you just been, you know, taking it upon yourself to be cautious? steady price. Because if you engage, your attention's on the engagement for the most part, at least for most people. But if you let yourself have times where you sit and watch price, which on CPI days, NFP, FOMC, through those news events, if you allow yourself to watch, right, and just pull yourself away from engagement and then listen to the things that we talk about and focus there entirely, you learn a lot more in those moments. Because we all know that when you execute a trade, what's your focus? Is it going to stop me out? Am I correct? Am I going to make money? Am I going to lose? What am I going to think when I lose? Right? I don't know if I can afford a loss, right? All these things are flooding your mind. And you can't focus on what led me personally to believe that this was going to be a good short. I just was denied by my stupid broker. And then this one too. The denial freaked me out. So I missed that one as well. It happens. But hopefully the logic and things that we talked about today that led to where price is at currently has been able to resonate. And again, if it has, don't forget to like the video and subscribe to the channel. And if you have anyone that you know that could benefit from this type of experience on a regular basis, right, whether they're good or struggling, if you guys can recommend the channel to people that you know who you think this can benefit, that'd be awesome too. I like word of mouth. It makes everybody a lot more close as a community. But, you know, people that just come out of nowhere too are welcome. I just like that way of marketing better. And I'm not flamboyant. You know what I mean? Fractal. Oh, that's Liquidity Trading Co. from last week. Is that you? You changed it to Fractal Liquidity Trading? Oh, nice. Nice. Oh, you took a buy in there from the bullish breaker? There's nothing wrong with that. There's nothing wrong with that. A little risky. It would keep me out of the buy because there's equal lows there. You guys know part of my rules are I don't like to buy equal lows. Now, once it gets up above here, we're not at equal lows anymore. We're moving away from it. So it's more risky in here because we don't know if it's going to take that out yet. But now that we have this double change in state of delivery, right? We have one change in state, shift in market structure. It's also the YouTube 2022 model. But we also have the double change in state. We have a large wick here. That's a balanced price range. We got a small market maker buy model. If it's going to go higher, it's going to treat this as a buy model. So this candle needs to be respected. So now we would move this to there. So we're going to have to stay above this. So we should not really see a deep retracement. If this comes and takes this out, the idea would be scrapped. Sheesh. Holy crap. I just wanted one candle to pull back a little bit. And it did. How beautiful. I would take profit up here if I was in a buy. I was looking to try to engage this to then target the high, but it just moved way too quick. I don't know what is happening now. Definitely not touching it now. Whoops. Yeah, so I would demand that this gets back above all of this, so that I can use this high to that low as a balanced price range. This whole run up here can be looked at as a potential market maker buy model. So that right there, that little area, that's accumulation if we are going to be bullish. Yeah, the first presented fair value gap idea, you know, like I said, I literally talked about this before it happened as well. Said if it gets back above it, it may offer like a trampoline, get us to run up above here. So that idea was correct as well. Yeah, that's a good idea. Uh, liquidity trading, it's a good idea. Yeah, Phil has entered the chat. He's been in the chat since CPI. He's also here with this. That's especially Phil. What are the other indices doing? So we actually got a bullish order block forming there. So I guess that's right at the 4-hour open. Let's go to, yeah, right there. So this is a 4-hour open, but it's also a bullish order block on the 15-minute chart. So that's nice. If it's going to be bullish, I think that this level should be able to hold. It's not only a 4-hour open, so we basically dropped down and now we're getting back above. So if you think power 3 on a 4-hour basis, we've now declined aggressively and now we're getting back above. So accumulation, manipulation, possible bullish distribution. Highly risky though, because we're now back to equilibrium. Like I said, this whole delivery in here may result in us coming back to equilibrium. It's 50-50 to determine whether this is going to blast through or just stay in a range. So again, it's a very high risk. But if you think of this lower time frame working inside that bigger one, remember, we're in a bigger market maker buy model as well. We've definitely had a heavy manipulation effect, but we're still closing above the midpoint of this previous accumulation. Okay. So we're still hanging out above that. So we got SMT at those lows as well, so that's pretty nice. Yeah, I think dollars were tracing to go lower. We got equal lows. Yeah, I think they're not going to leave that. So yeah, we're getting close to a macro. So let's see what this wants to offer in here. We could really just be in a range that doesn't move a lot. That inversion fair value gap there is now reclaimed, so we don't want to see it break outside of really any of that. If it's going to be bullish, we need to see it hold that. Preferably doesn't go beyond that 50% level right there. Slow retracement. Wow, we did take out these highs here. It's pretty nice little response in there. Let me see how many points was that. So from the top of this gap in there up to that already offered 30 points. And you guys, hopefully, let me see real quick. Why the hell is that thing not working? See, I was able to capture this exact move right here. Simply from that low, that whole candle, almost 40 points. Could have held it longer, but again, I've been having issues with the broker. I'm surprised it let me get in this time. So, not gonna lie, psychologically, I'm a little fearful. I trust the analysis to go up there, but I'm fearful of the broker right now. It's definitely threw me off in terms of my trade management ability and just psychologically. But clearly, the overall direction and what we're looking at, it's clearly unfolding, and hopefully it makes sense exactly what we're looking for.
and why this is to hold up here. But I got to be honest, right? I'm not someone that hides anything. It did definitely affect me seeing that my shit's being denied. I'm scared of getting in and then them not letting me get out if I am wrong. But I'm pretty confident that we're going to continue to go up in this case. But, you know, got to be honest, right? But I was able to at least capture that. And it did let me get in and get out. If I go ahead and show you guys that real quick, just for completeness sake. Okay. Right when it came back down, tapped it, price ran up right inside that candle. Just immediately took profit right as it went up there. I just aimed for 20 to 30 points, and that literally was 36 points. So not too bad. Amp Live, who's really messing with me today. Haven't had a problem in a long, long time. For whatever reason. When we call 150 points short, that's when they decide to deny me. But 30 points is good. You know, that's all we really look for. That's a very tiny amount in comparison to what is generally offered a lot of the time because of our framework and what we're utilizing. We're utilizing larger PD arrays. I've told you guys this before. The best thing that you can do as you're learning to grow into the larger swings in price to get more than the baseline 20 to 30 points secured, the best thing you're going to do is frame things from a PD array that's larger. This was a 15-minute fair value gap. And it was used twice for the ideas that I looked to engage, right? 3 times. Okay, so right here at the midpoint of it, that was also in conjunction with the first presented fair value gap and the relative equal lows down there and the regular trading hours gap that's available, right? So it was used 3 times here, right? Once here for an entry. We had that breakdown in here. So retracement, we had this breaker in here. So that lower portion was respected. We had displacement right at the 7 a.m. time. So we had that 7 a.m. reversal. Yeah, see, I'm happy I actually got out quickly because now we're stuck inside a range. It's coming back. But there was that one. There was this one I talked about. Right, said that's probably a good idea too. Target these lows. Then it offered it one more time. Kind of a slow, high resistance. Beautiful delivery in there. And then price turned around, set up a market maker buy model, which it did complete above this accumulation or consolidation, right? And if you take this high to that low, you see the accumulation on the left side turned distribution second stage. So we had a quick run up. So the market maker model ability showing yet again on a regular basis. And now think about it. If this ends up below this level, we have equal lows. If this ends up below here, even this, right? This is consolidation. We have a little accumulation in there. Look at what price is doing, how precise it is. If this goes lower, this is not only going to be a market maker sell model to target these lows, but this low to that high, once it breaks that low, we're going to have accumulation turn distribution, coupled with the inverted fair value gap on the 15-minute, coupled with the first presented fair value gap being respected, okay? And then paired up with the equal lows down here. So yeah, this rejection block, and that was pretty beautiful. Again, this right here is a market maker sell model too. It's a little piece on the 30-second. If we could go below the 5-second chart, right? Or below the 1-second chart, Maybe even the 1 second chart would show it in here. Because look, you got accumulation. We have previous down close candles that acted as bullish order blocks. Once they get violated, what happens? Price comes right into it perfectly. Also couple that with a fair value gap. And again, the idea of the lows being targeted just really, really drives home the point that this stuff is happening constantly. Sometimes it'll be a shit show. So previous accumulation may get chopped around, but that's consolidation. It's kind of just what it is. Sometimes it's a bit reckless, but eventually it opens up and then creates another market maker model. And then we also had the larger swing market maker sell model that we talked about. It did complete it just barely by like 2 ticks. But it still worked out. Okay. That accumulation turned distribution, second stage distribution. How do you know? It's speedy away from that level. And we could barely close outside of that range. It did a little bit, right? But the volatility is pretty insane on CPI week. So you got to afford for coloring outside the lines a little bit. But you could see speed and distance till it got to these lows. And then we hit these lows and we've rejected aggressively back off, literally right back to equilibrium. We said that that was a risk, right? Said that it could very easily look to try to come all the way back up because of the lack of follow through that is afforded to you on CPI, NFP, FOMC, Fed speeches, rate announcements, so on and so forth. And we had 2 of those today, CPI and Fed speech, which I'm going to go look into. But look, remember what I just said about this potentially, if it's going to go lower, being a market maker sell model? That accumulation should turn distribution. And it did. That offered an opportunity. First presented fair value gap. We traded through it back into equal to the midpoint, and then it offered another short if your objective was to target this intraday volatility here. So just think about this, right? Like you don't need a daily chart to do this type of trading. Have I referred to the daily chart when it comes to this? No. Right? I've referred to the higher time frame equilibrium because that's important to know about. But again, if you just sit here framing out market maker models and you can see part of them unfolding, you could somewhat anticipate what it could do. It's more high probability when you have more layers, which are things that we teach here, right? But again, this stuff is standalone. Same with Power 3. You can look at Power 3 on the hourly, right? And trade the hourly ranges utilizing the Power 3 theory and only engage when it looks very clean, very obvious that it's a bearish Power 3 or a bullish Power 3 aiming at a particular very obvious level, maybe trendline liquidity, maybe it's relative equal lows, maybe it's equal highs, maybe it's an obvious PD array, maybe it's an obvious fair value gap, right? Maybe it's a liquidity void where there's no liquidity. Maybe it's a regular trading hours gap that's not filled yet. I showed you today, pretty much all week, pretty much for 2 years straight, how significant, both on a long-term basis for long-term regular trading hours gaps being traded to, things from like 5 months ago, 4 months ago, 3 months ago, how price on the higher time frame will refer back to those, just like how on a day-to-day basis, current lower time frame price delivery and intraday volatility will also use the last couple of days regular trading hours gaps as well, along with new week opening gaps that are in the area. So you guys get a depth of knowledge being here, and I hope that all this stuff is easily internalized. But I think this is just about going to do it for us today. I think we've done enough. Called 150 point move that I wasn't able to get into because of stupid broker. Talked about this as a secondary entry. All of that stuff worked. We framed all this stuff out ahead of time. We talked about the framework that led us to get to that point. Talked a little bit about mindset today. Called out a couple of moves. Every idea that I've shared today has worked out. Whether it was this short, or if it was this small little buy offering 20 to 30 points. We only aim for 20 to 30 points. So if you get into a trade and you hear me say that it's low probability day, if we're offered more, great. But if you're just getting your footing, aim for 20 to 30 points and get out and watch and study the context and what gets us to arrive at those bigger price swings. But all you need is 20 to 30 points and you can make everything that you would ever want to make. Because if you scale that 20 to 30 points, which is just this small little fraction of the bigger picture that we literally walk, all of, right? If you could just get your little piece like that, you will be shocked at what you can accomplish. I promise you. I had pushback on it too. I was like, this is not enough, or I need a bigger lot size, or I need this, or I need that. This gives you velocity. There's 20 to 30 point moves happening constantly all day long. Question is, are they aligned with your model? And does it make sense to do that, right? To take those executions, right? And what makes you arrive at those perspectives? Are we bullish or bearish? That's a very loaded question, right? And hopefully you guys have, at this point, if you've been with me for a while, you have many other components that are helping you get to the point where you can call where price is going to go at a minimum, pretty much every single week, every day. You may not be able to engage because there's a different level of experience and, organization, conviction behind your ability to be able to engage every day, which you get some of that here, and you get to borrow my experience every day. So but hopefully you guys are making progress. Hopefully today made sense. Again, if you're new and you're just getting your footing with the foundations, this is all you need. You only need 20 to 30 points. And if you had that perspective today, again, all the ideas that I shared, 100% of them worked out with the lens of 20 to 30 points. We were right here at equilibrium. Literally the only thing I was aiming at is to get either to equilibrium or just a little bit before. We got obviously to equilibrium, but we tapped it once. So I just took the 30 points. Again, that's all we look at anyway. Okay. But everything we called out has worked out. I hope you guys got value from today, but we're going to leave it there. Let me know your thoughts in the comment section about the video. What did you guys learn today? If you learned something, or what was reinforced? What was your favorite, most effective part of the call that helped you the most? If you could share those opinions with me, I'd appreciate it. Either in the comment section, which I think is probably the best way, because it'll kind of show everybody what's being taught and what you personally as a student are able to gather from these calls. But if you want to keep it private, you can always hit me up on my Instagram, or you can hit me up on Discord. Careful of the fake, stupid ass impersonators who try to use my amazing understanding to try to victimize some of you guys. I will never trade your money, and I will never ask you for money unless we're already in a conversation about, or in a discussion about like one-on-ones and all these other things. Other than that, I'm not going to be asking you for money. Okay. I won't even ask you for money in general anyway, because I have stuff set up for you to go do that on your own. If you are going to invest in me as a mentor on a closer basis, I'm not going to trade crypto for you. I'm not going to ask you for crypto. I'm not going to do any of these stupid things. Okay. So yeah. So in the comment section, Emmanuel, you're going to have to wait. You'll have to wait for the video to be uploaded. So basically when I'm done, when I close it out, pretty much, I think it only allows the chat window. I'm not sure, actually. That's a good question. I think it allows it. Maybe I don't have it enabled. I know for a fact that when I close the call, you'll be able to post a comment. So I appreciate you being open to doing that, Emmanuel. You're in the private group too, and you're still open to sharing that with the students here on YouTube. So I really appreciate that. But yeah, so I'll leave it there, you guys. Again, hopefully you got value. God bless you guys. Thank you for choosing this channel and me to spend your time with. And hopefully you guys feel like your time is well spent here, because I know that time is an investment, and I do not look to waste your time. I just want to be a benefit to you. And I hope you guys see that that is the case. And if not, if you guys think there's anything that I can do to maybe help you learn more or maybe help others learn more, I'm always open to hearing what you guys have to say. Because again, this is for you guys. It's not just me, right? What I do is for you guys. I want to see you guys succeed. And the mentor that I am today has been cultivated by student feedback. You know, the way that I run things, you know, I've always asked for feedback because I want to help you guys learn in the best way possible. I know a lot of things that are effective because I've taught so many people, but there's always room for improvement. So, you know, feel free to give me any feedback in that regard as well. So, again, thank you guys for choosing WMG Trading as your live call to watch. Thank you guys for hanging out today, sticking with me this long. Let me know in the comments once we upload the video what you guys got value from today. And don't forget to like the video and subscribe to the channel. But we're going to be live for the rest of the week. So tomorrow and the next day. So expect that. And yeah, so with that being said, again, I appreciate y'all. And I will catch you guys on the next one. Right. If you have any questions, don't forget to ask. I'm always here to help. Okay. So I'll see you guys tomorrow. Have a good rest of your day. Be careful. Don't do anything stupid because we got work to do tomorrow. All right. All right. Take care, you guys.